TJ the Wheel Deal coming at you live. It is Tuesday, Taco Tuesday. We could use a taco trade right about now. Anyway, I hope you guys are doing well. I'm TJ the Wheel Deal. I sell puts, I sell calls for a living. Roll one makes dollars and cents. And I trade live quite a bit too. I don't do it as often as I used to because it actually costs a lot of money because you're just trying to move the stream along and you don't get the best fills. You don't get the best fills. And whenever I'm selling, 1,000, 2,000, 5,000 contracts, a dollar here, a dollar there, man, it really, really adds up. So that's the main reason that I don't trade live as much anymore because it costs a small fortune. It literally costs a small fortune to trade live with such big money. Now, on a small account, it wouldn't be as big of a deal. Anyway, there's the little link there. If anybody wants to jump on and shoot the shit, if you will, we can do that too. It's gonna be pretty informal today. What's going on, Juan? What's going on, Manish? I appreciate you guys. Um, so I want to talk. I'm gonna get into it first. I'm gonna do the 1 minute with God, and then I'm gonna get into the portfolio recaps, and then I want to do a teaching segment with you guys because I've been on the Tasty Trade platform for over a year now, and there's some metrics that I was familiar with going in, but I didn't really know them. I didn't really know the magnitude or the gravity of the situation, if you will. I didn't understand the gravity of the situation. Now I do. So I want to share those metrics with you guys because I know there's probably 8 to 10 people that have used my referral to go on Tasty Trade to begin with, to start their journey on Tasty Trade. Everybody's excited about the naked strangles and stuff, but it's like a lot of times we just see the gimmies and we don't really pay attention to the gotchas, if you will. Like Dr. Jim's always talking about the gimmies and the gotchas. Well, guys, there are some gotchas too that you need to be aware of. And a lot of it could be negated if you play small. I think that's why Tasty Trade promotes trading small and trading often. I am never going to subscribe to that mindset completely because I would rather do fewer trades, larger trades, and you're either going to make money or lose money, but you don't have as much to babysit. I'm not looking for a job. This is a business for me. I'm not looking for the next setup. I sell puts and calls on the same stocks over and over and over again until I manufacture the win on that particular ticker. It just comes down to credits and debits on that ticker over long periods of time. But that being said, proper sizing is still important, regardless of how much money you have or you don't have at your disposal. So, those are the metrics that I'm going to talk about here today. So, let's get into it. Let's knock it out 1 minute with God, and then we will go from there. I appreciate the people tuning in. I know that Amit is on. I want to welcome some of the people from his channel. I went on his market close yesterday. Woke up this morning and there was like 400 new subscribers on the channel. This dude just has crazy reach. Just has crazy reach on his channel. So I'm thankful that I was able to go on his channel yesterday so we can get a bigger audience, if you will. And it's always fun shooting the shit with Amit, dude. Amit and I really get along. We really get along. He's somebody that I consider a friend, even though I've only met him a couple of times in person. We've texted frequently over the years, a few offline phone calls over the years. And it's just a genuinely good dude. He's just a genuinely good dude. He's got a lot of positive energy. And we need more Amits in the world. We need more people with that kind of infectious energy versus just a bunch of Debbie Downers, if you will. So anyway, let me get this going here and we will knock out 1 minute with God. So March the 24th, 1 minute with God, servant. What does it mean to be a servant leader? Jesus revolutionized leadership in a striking picture of servanthood. Jesus humbled himself by performing the task of a slave, showing us how far we are to go in serving others. As a servant leader, you should be willing to perform any task you delegate to others. How can you demonstrate servant leadership today at home, work, church, or with your neighbor? God's response. He got up from the table, took off his robe, wrapped a towel around his waist, and poured water into a basin. Then he began to wash the disciples' feet and to wipe them with the towel he had around him. John, I think it's 13, 4 and 5. I have a hard time reading the real small print with these glasses, guys. Whoever wants to be a leader among you must be your servant. Matthew 20 and 26, I believe. God's challenge. Since I, the Lord and teacher, have washed your feet, you ought to wash each other's feet. I have given you an example to follow. Do as I've done to you. John 13, 14 and 15. Guys, the best leaders were once followers. You know, the best leaders were once followers. So you want to be a real good leader, you got to be a follower too. And, you know, you got to be the type of person that is willing to get into the trenches with people. You don't want to just be, you know, kind of like coaching people from your ivory tower or from your horses and they're out in battle. You want to braveheart it a little, you want to braveheart it a little bit, if you will. Anyway, that's 1 minute with God, March the 24th. Peace out. So there's that. Now I get over here and I downloaded from the Meta AI, and then I'll post it on X, and we are on our way, guys. We are on our way. So we'll get that going. Now we're going to have portfolio recaps real quick. The market's not doing as well today. Don't really know what's going on. I mean, it's so hard. So there's so much information coming at us, guys. So much information coming at us. You know, now that I'm following more people on X, because I'm trying to like follow like 20 to 50 people every couple of weeks on X, new people. My timeline's flooded with information now. So it's like I don't know what's real or what's not real because these are new people to me. Because I get a lot of my news from X, as some of you guys do as well. And then I try to keep up with CNBC, a little bit of Fox News, a little bit of CNN. I can only handle about 5 to 10 minutes a day of those stations because they're just like extremely biased. There's just like nothing that I can really find down the middle except for the people's opinions on X. So I feel like I rely a little bit more on X, if you will, even though some people will say that X is like super, super pro Trump. I don't find that to be the case on my feed personally. I think it's pretty down the middle. A lot of people kind of call it like they see it. But the one thing that I will say that is really, really exciting and surprising is that Bitcoin has been pretty strong. It's like finding, it's finding its footing here in that, 65, 70,000, $75,000 range. It's pretty wide range, right? But for Bitcoin, not really. So that's good news. And I like it on the weekends because that's my go-to ticker. You go to see what's Bitcoin doing, and it kind of gives you an idea of what the market may or may not do on Monday, if you will. And I've been stacking those, they're new to the channel. I've been stacking a little bit of Bitcoin since December the 14th of last year. I've always sold puts and calls on a lot of crypto proxies, if you will. Made a lot of money with the miners. And now I'm in BMNR and MSTR as well. Those aren't going so well, but I think we will manufacture the win. The miners, all they did was make money for me. But now it's like, I want to actually stack some Bitcoin. So I started buying Bitcoin on Cash App. It wasn't like probably the best place to buy Bitcoin, but I already had the account set up. So, and then they have the auto daily deal. So now I'm up to $100 a day. I got probably like $12,000-$13,000 worth of Bitcoin so far since December the 14th of last year. And I'm trying to get to an entire Bitcoin. And I've been moving the money over from Cash App to my SoFi wallet because I'm just a lot more comfortable in SoFi. I've got the credit card with SoFi. I've even got a personal loan that I've gotten with SoFi. I just trust the company a lot more. I'm sure Cash App, Block, I'm sure it's all legit too, but I like having most things in like one spot. That way I can go and I can see it all. And that's why the one-stop shop is very appealing. And Robinhood's kind of turning into that one-stop shop as well. A lot of y'all use Robinhood. Nothing wrong with that as well. Amazing company. Anyway, so let's see a couple of moves that I did make on the portfolio today. I did make a couple of moves. So we'll talk about those. A little bit of a drawdown today. Not too crazy though. Not too crazy. I'm going to show you all a couple of these metrics right here, and then we're going to switch over to the web version. That way, I could zoom in a little bit more. But essentially, here the first thing that I look at is where are we at for the day. So we're down over $250,000 across the board, and you'll see multiple accounts there because this is our account, the 60, and the account ending in 47. That's our account, and the other accounts are friends and family that I have limited trading authorization on. That is how that works out. So the other metric that I look at right away, guys, is buying power usage. Buying power usage, this is a metric that I would prefer to keep under 50% when it's a low volatility environment, because a volatility expansion hurts you when you're an option seller, when you're a premium seller. Whenever it's a higher volatility environment, you can play in that 50 to 60 range. But I say that's kind of like your caution area, if you will. It's like red light, yellow light, green light, like traffic most of us drive. So I would say that green light, high volatility, you could be 50, max 60%. When you go over 60%, no matter what the conditions are, you're more in that yellow light territory. Don't do it. And over 70% is red light. Just don't use buying power usage percentage above 70%. Why? Because you're one IB spike away from getting into a margin maintenance situation. And it's going to all turn. You're going to have parentheses. You're going to have buying power usage. It spikes from like 70% to like 150%. And you're like, what? So now you have to figure out, okay, we're going to get my buying power back. You have to start closing positions. You got to roll. You got to inject more cash. It could create a state of panic, if you will, if you don't have a journal where you're tracking moves that you're going to make if shit hits the fan. And every day, the first thing that I do when I come to the office, I log onto the account. I'm like, okay, if shit hits the fan today, what are 3 moves that I can make to get my buying power usage under control? And because I trade really big, it's about what positions would I cut, regardless of what they're doing. And it has to do with the highest conviction plays, right? Like I want to keep those on. And then like whatever I'm doing, premium cash grabbing, if it's not as high conviction, that one will go because I can always put it on the books later when things calm down. So those are the things. So let's go ahead and talk about the metrics here first, and then I'll go through uh, some moves that I made today. Because I made a couple moves, small moves, but moves nonetheless. We'll talk about those. But now that I'm here and I'm already in the mindset, let me tell you all about some key metrics. So we're going to stay in account ending in 60 for now, and I'm going to walk y'all through it. So right here, you got the balance in cash of 14 million. So that is taken into account not just your net liquidation value, it's taken into account all the premiums that you've collected on open options, whether you sold puts, sold calls, whatever the case may be. It's all adding all of that up. Now, how do you get to what is your expected net liquidation value? Because right now the net liquidation value in the account's about 11.5. So how do you get to the expected net liquidation value, provided that all of your options expired out of the money? You guys can see there that I don't have any ITMs. I don't have any options that are in the money. So this is very real. Like the positions that I'm selling, the puts and calls that I'm in right now, like for the most part, it's working. It's working. So what you do is you take that extrinsic value. So in this case, it would be 8.2. And you add that to the 11.5. I know that y'all can see it there, but you got to trust me. It's about 11.5. Those of y'all that are members in the channel, you guys see the net liquidation value 2 or 3 times a week because I posted for us on the WhatsApp group. So y'all can vouch for me on the comments, please, for the doubters out there. But basically, you add the 8.2 plus the net liquidation value, and that would give you your anticipated net liquidation value when all of the options were to expire out of the money if you were to stay in it and to the entire duration. So that's going to bring me to another metric. Is it worth staying in an option to the end? The short answer is no. Why? Because you have a lot of tail risk. So I was very familiar with tail risk coming over from Reg T margin maintenance, if you will, over to portfolio margin whenever I came over from the Robinhood platform. But I didn't fully understand tail risk the way that I feel like I understand it now, because you have a lot more metrics in front of you on Tasty Trade. So the magic recipe is sell puts and calls 30 to 45 days out if you want to maximize all the probabilities, because this is a game of probabilities. You want to sell puts and calls 30 to 45 days out, and you want to manage that trade 21 days to expiration. Whether you're profitable on the trade, you're not profitable on the trade, you're just going to cut your losses, do it around the 21-day mark. You want to lock in a win, whatever that win is, if it's 10%, 20%, 50%, wherever you're at. You want to treat 21 days to expiration as if it is your expiration date, so that you never have to deal with the gamma risk. And what am I talking about? Or the tail risk. And that is typically the gamma risk, is because as you get closer to expiration, any movement in the underlying is very, very sensitive. Like your options pricing is very, very sensitive to any movement the closer you get to expiration, because it's shit or get off the pot time, guys. It is shit or get off the pot time. So it's really, really important that you're mindful of that, because whenever you sell an option, you're going to have your Greeks, and one of them is called the delta. The delta is the price sensitivity to the option. So if you got a delta of 30, the option is going to move up or down 30%, 30 cents for every dollar in movement up or down in the option. So if you're short delta, you're losing 30 cents if the stock goes up $1. If you're long delta, you're gaining 30 cents if the stock goes up $1. But then you got this little brother, pain in the ass brother, called the gamma. So the gamma is the accelerator to the delta. You got to look at the delta as the car, and then the gamma is the accelerator. And it's like an instigator, if you will. So it's like, okay, you're going to get 30%, you're going to get 30 cents on this move, on this dollar, but then your gamma is going to have a value, and then that gamma is going to increase or elevate the size of your delta for the next dollar, and it's just like a snowball, and it just keeps getting bigger and bigger and bigger as it rolls down the hill. And it can spiral out of control, because everything's going to come to a head because you have an upcoming expiration date. So in other words, like in short, tail risk is the time where a lot of winners can turn into losers. I call it overstaying your welcome. You're in a trade, things are going well, everything's kosher, everything's copacetic, you're printing. I look at it as like $100 bill. The first $50 of that premium that they paid you up front that you collected, it's going to be a lot easier to capture than the second 50%, because you're not dealing with the tail risk. But if you want to overstay your welcome because things are good, the waters seem calm, you're looking up, you don't see, a torrential storm coming your way or anything of the sort, and you're feeling really good about it, right? You're feeling really good about it. So you're like, I'm just going to camp out a little bit more. So the first couple episodes of the Madison yesterday. I think it's on like Paramount or Prime or one of those. And Kurt Russell's character is fishing with his brother's character in the show, and they're like, it's like a virgin stream that nobody really fishes on, so they're just like catching, right? They're doing their little fly fishing, or they're catching trout. And then Kurt Russell's character looks up and he's like, "Hey, there's a storm up ahead." And the brother's like, because they had flown this little puddle jumping plane or whatever. And it's like, well, there was nothing on the forecast for the weather. And Kurt Russell's like looking up. It's like, it's right there. There's your forecast. So they keep fishing. And then like, an hour or two later, whatever passes, obviously it's only like 30 seconds of screen time for us as viewers. Shit's getting really bad. And then the brother's like, the one that's the pilot, he's like, "Hey, we need to get out of here." So they get out of there and then they're flying and it shows that they eventually crash into a mountain. That is overstaying your welcome. That is overstaying your welcome. If, let's just say this has been real life, Kurt Russell's character is like, hey, we need to get out of here the minute that there's signs of trouble. Maybe they get out of there alive. But they overstayed their welcome and they got, they perished. That is your tail risk whenever you sell options, guys. Don't overstay your welcome. Don't overstay your welcome, and you will likely never have to deal with the gamma risk. And then the idea is if you just keep rolling and rolling and rolling, eventually you're going to capture that 100% or do it over and over again. And you can still make a lot of money with these tickers, but you want to play where the blood pressure is low. You want to play where the waters are calm. You don't need to go where the waters are so choppy. So that's another thing that I already knew it, but now I really know it. Like, just deal with it wherever it is. At 21 days, just add more time to the clock if you want to stay in that trade, or close it out and look for a better spot. So there's that. Another metric that is just tried and true is the theta per day. Right there, we're at 81,000, and it's 11.5 account. So you take that percentage. What is 81,000 of 11.5 million bucks? And it's going to be probably between 0.6 and 0.8%. Well, Dr. Jim doesn't recommend going over 0.5%. And that is all systems go, high IV environment, and you're playing for volatility contraction. You're not even worried about the direction right now. You're just like, dude, IV contracts, we're up 20, 30, 40% on the option. That's it. That's a taste trade way. Sell options in higher IV environments and play for the IV contraction. You can play bigger when the IV's higher because you're getting paid more to take on that risk. When the IV's lower, you want to play smaller. And that is something that I was familiar with, but I wasn't like super familiar with it. So I played bigger in lower volatility environments. And then when the IV spiked, it squeezed me out of some positions because our buying power diminished. So I had to close some losing positions that I could have just rolled and stayed in them long enough, roll right until you're right. But the issue is if you run out of buying power, you can't write it out enough. So that's where sizing becomes very, very important. And how do you know whether or not your sizing is okay? It's always going to come down to the golden metric over here, the buying power usage. So we look at this account over here, buying power, 40%. We're good. Buying power, 58%. 60%. 55%. We're good. 60%. We're good. 62.5, playing a little bit big. 53, we're right there. The big account, 59. This other account, this is the account that I take the most risk on, 64.4%. And then this is the DGen account, my son's account, where we're all in on BM and U. So that one, the buying power usage is irrelevant because I'm essentially running a covered call strategy. So I own the shares and then I'm just selling covered calls and I'm all in. There's no buying power because they're owned in BM and U. All the money's in BM and U. So the buying power isn't really as relevant on that particular account. So those are the metrics in short that I've learned. And there's a lot more stuff along the way. I just don't want to get into the weeds too much. I want to give y'all a little bit at a time. Buying power usage, 50% is your sweet spot, man. If the IV's high and you're playing for a contraction, maybe you can push it to 60%. Don't go above 65%. You're just one IV expansion away from getting into a margin situation. So make sure that you have your get out of jail card lined up. Like, what are the 2 or 3 moves that you're going to make to lower your buying power usage? And then theta per day. I was trying to get 1% a day, guys. I was like, I get 1% a day. I'm TJ the Wheel Deal. And the metrics are like, no, you cannot. Because you got to look at conditional value at risk. These are other metrics. I'm going to tease y'all And then I'm going to make sure that I really, really understand the concepts before I spit it to you guys. But the other things that I'm learning still is the conditional value at risk. And I'm really understanding the differences between reg team margin and portfolio margin. Reg team margin, the collateral is static because it's cash secured. In portfolio margin, the collateral is not static, it is dynamic. So I'm just going to paint this picture for you. The longer you want to stay in the trade, the more money Tasty Trade is going to want to earmark for that trade. So that capital requirement, let's just take MSTR. Let's just take MSTR. Expires 21 days. What I got, or 24 days. What I got a short call that I sold today, expiring in 24 days at 180. So I basically made a bet with the market that I think MSTR is going to be trading below $180, and they paid me $82,000 for that. Already up $1,000 on it. Cool. But I also have a bigger bet 52 days from now that MSTR is going to be trading within a range, and the range is 110 to 200. So Tasty Trade's like, cool, we're going to need some collateral, and we're going to do that with like $1 million right now. So just do the math on that, right? This is a $22 million notional right here. And this is an agreement to deliver $18 million worth of MSTR on April the 17th. So you're like, why? How would they allow you to do that and only tie up $1 million? Because they understand that these trades are mutually exclusive from the standpoint that these 110 puts cannot be getting challenged at the same time that these 200 calls are being challenged. So Tasty Trade practically invented the game. So they understand the game that I'm playing here. They understand the range game that I'm playing here. They understand deltas. They understand all the Greeks, the Vega. They understand the Gamma. They understand all of it. They understand all of it. But that being said, how many times has Tasty Trade told us that managing your trade 21 days to expiration is paramount? It's imperative. It's crucial. It's critical. Whatever word you need to use, whatever word I need to use to get the point across to you. They're like, hey, handle your business and handle it early. You want to stay in these oversized trades, which I don't recommend, but if you're going to be in these trades, period, just make sure that you manage it 21 days to expiration, because the closer you get to expiration, the more capital requirement we're going to earmark. So you got to be mindful of where you're at on your options buying power, where I'm at on the buying power usage. I was in the high 60s last week. So I was like, let me pare it back and let me scale it back. Because in my mind, I'm like, okay, they're probably going to double this capital requirement. And there's this other metric that I stumbled upon, and it's plus or minus 15%. So you take the share price and you take your strike prices and you stress test it. And you're like, okay, if this share price spikes 15% immediately or drops 15% immediately, does it go in the money? Does it go in the money? If the answer is yes, then there's a very high probability, there's probably a mathematical certainty, I'm still digging into these numbers, that capital requirement is going to spike up on you, and it's going to compromise you depending on your sizing, because you're basically saying, I see the dragon over there, I see the fire, I'm going to keep walking towards the dragon, and because I can handle the heat, and I just don't want to get to the point to where it burns me. And Tasty Trade's like, okay, but we're going to earmark more money. We're going to earmark more money because you are playing with fire. And how many times did we play with fire as kids, guys, with matches as kids, and we ended up burning something, right? Ourselves, a house, whatever the case was, right? That happens. Well, that's going to happen whenever you overstay your welcome as well. So those are the bets that I made with MSTRs. Like, I think it's going to be under $180, and I want to get paid money for that. So they were like, okay, cool. There's $82,000, and that's going to help offset the risk that you have of potentially being assigned a shitload of shares at 110. And we already know that this is a premium cash grab. How do we know that? Because we don't have enough cash in the account to take ownership of all of those shares. And that's also a no-no. You should not exceed your notional value on any position if it's going to exceed your net lick. So essentially, if I was properly sizing here, this would be probably 1,000 contracts, maybe even 500 contracts. But because I know that I'm premium cash grabbing and I'm either going to make money or I'm going to lose money as far as premiums, taking assignment of shares isn't even an option. I'm just going to continue to roll size down, uh, expand the goalposts, etc. Like I know the campaign that I'm running. Here's the issue. Tasty Trade doesn't know what's in my head, so you got to look at it from their perspective. And Tasty Trade and any other brokers for that matter, they're always going to do the things, believe it or not, that protect you and protect them. They're not here to harm you. So they give you these parameters to essentially guard you from blowing up your freaking account. And if you want to go like super crazy, they're going to give you concentration risks. They're going to be like, no, you don't have enough buying power for that. I know that you want to go sell another 2,000 contracts at $70 because MSTR are going to go to $70. You're like, let me go grab all that money. They're like, no, we're not going to let you do that. We're going to protect you against you. BMNR, what I do on BMNR? Nothing. We're at 72%. I've considered rolling this down. I've considered rolling this down, guys, to like 25 just to grab more premiums. I'm like, okay, BMNR is not performing. I want to go grab more premiums. Maybe even like right here. Give me another 45 grand. I don't think it's going to go to 26. Is it working? Did I just do that? Did I just do that? Okay, guess it is. Okay, cool. So now I'm just trying to roll it down from 30 to 26. I fat thumbed that. I did that on accident. I wasn't actually meaning to do that, but now that it happened, I'm cool with it. It's whatever. So anyway, Amazon. What else did I do on Amazon today? I have these 25,000 shares right here. We got these 25,000 shares right here. And I put the shares for sale at 230, and then everything else is just a short strangle. So I'm like, okay, I've got these shares, bought them at 208.64. I'll agree to sell them to you at 230, and they paid us $15,250 for that. Why? Because I'm feeling a little bit bearish on Amazon right now, man. They're being recipients of a lot of bomb fire in the Middle East right now. So I feel like eventually that's going to hurt their numbers a little bit. So I'm like, I need to collect premium on those shares. I got to collect premium on those shares. And then also, if Amazon were to somehow pump to 230 in the next 24 days, I'd probably be tempted to let those shares get called away so that I can increase the cash position in the account, because those monies right there on those shares would go to this cash position, and the cash position would be a lot higher. So there's that. I didn't make any other moves. I didn't do anything with SoFi. I didn't do anything with Palantir. I wanted to be on the other side, guys, just so that you guys it's a little bit easier to see. But anytime that I'm looking to make any trades, I like to be on this side. Another trade that I've considered doing if Palantir were to pump again to like 160, because I almost did it yesterday, I just didn't do it, is I want to do a shorter dated call on Palantir at like $200 for like the 50-day cycle. For like that 50-day cycle. That 52-day cycle. I want to do maybe like 500 contracts of Palantir calls and just bring some more monies through the door. I just want to ring the cash register a little bit more. So that's really all that I got going on in a nutshell, guys. Let me do a little bit of live Q&A and we'll go from there. Appreciate all y'all tuning in. 436 people on X, 44 people on YouTube. Y'all can do me a favor, smash the like. That'd be really, really cool. Consider subscribing if you haven't done so already. Where are we at? Thanks for the content. You're welcome. Good morning, team. I have SoFi 17 and CleanSpark 9 expiring Friday. Wouldn't mind assignment on both. I assume those are cash secured puts. How are you, Parm? Morning. Love the episode on Emit yesterday. Great job. Right on, gal. We're probably going to do that once a quarter, 2 times a year, something like that. Just kind of go on there and let people know what I'm doing. As Emit gets more comfortable with it, and he sees that it's not actually as complicated as it sounds, he might be more open to exposing his audience to it. But initially, man, especially if you're going to play real big, people could potentially blow up their accounts doing this kind of thing. So we got to be mindful of that as well. Appreciate you, Gretch. Is this the same philosophy for credit spreads as well? I'm just not as familiar with credit spreads. On put credit spreads, what I like about put credit spreads is you can turn them into regular short puts. So the stock tanks with the long puts paying you some pretty good monies, and then you can just manage the short put like you would anything else. Anywho, Prabs, what's going on? What's going on, Mark? Welcome to the channel, my man. How are you?
Good, thank you.
Always good to see you,
Just
man.
sitting.
How's it been going?
It's been going pretty good. I've got my stable of horses, and then just waiting for the race to begin, so to speak, or the breakout. SoFi hit me pretty hard. I discovered I was more invested emotionally in SoFi than I should be.
Okay.
Um,
And what
but
and how did you come to that realization?
it's just as it was declining, just not realizing like, hey, you're up. Maybe you should have taken profit more. And just wishing for a buyout, wishing someone would come in and buy SoFi out and put me out of my misery, so to speak. I followed that since the beginning, had a lot of faith in it, and it's a good company. I believe in it, but to see it go up and then come down in such a hard way. But now I'm putting more financial commitment into a couple other stocks, a couple other companies, a couple other horses. So
Mark, you've said a mouthful there. The reason that I don't get as emotionally attached to any stock is because it's not like marriage. Like, I can't picture being married to anybody else except for my wife. Oh, I think that BM&R. Hold on, let me go in the background. Oh, it's still working. Yeah, we're doing that roll. We got 125 filled. So I'm going from 30 to 26. So again, it's very comfortable at 30, but we want to go after a little bit more money. We're greedy here. So I wanted to get an extra 40 grand or so. I'm like, you're gonna have to endure this pain and freaking BM&R. It'll pay me a little bit more money, right? But nonetheless, I always have 3 or 4 plays, oftentimes as many as 5 that I'm like equally excited about. So if one of them starts becoming a pain in my ass, I just turn my energy and attention into something else. And that just really helps me to stay even keel. It just does. So as much as I love the short puts that I got going on SoFi, hold on, I think we're in business. Can y'all hear that in the background or no? Can you get? Is that just
oh
me?
yeah, we can hear it.
Okay, yeah. I'm telling y'all, I literally tried to ring the cash register. so Tasty Trade has that thing where it's like it'll sound like a cash register to let you know that you're ringing. So got 486 contracts filled so far. We got a ways to go. And this is why I normally do this offline because it takes a while to fill this many contracts. Because you need somebody on the other side of the trade, right? That's what a lot of people don't realize is there could be open interest. That's one thing, but you still got to get it to merge, and that's going to turn into volume. And it's you gotta go to the club where there's a lot of people on the dance floor, and there's a lot of people holding up the wall with their foot, waiting to go on the dance floor. That's your open interest. The volume is the people on the dance floor, right? Your open interest is the people leaning up against the wall trying to find a dance partner. So I put 1,500 people leaning against the wall. 486 of them are dancing now, right? So this is like, I'm real good at giving y'all illustrations of how this shit really works. People think that the minute that they put their order in, because there's enough open interest there, they're going to be good. Not necessarily, because they got to be willing to dance at your price. And that's the issue, right? Like, and I'm like, I already put my price and I didn't go tick it down. So if you don't find anybody dancing at your price, you go tick it down and see if there's people to dance. But I'm like, dude, it's $1,500, man. I take down $1. That's $1,500. And I'm like, I feel like I probably shouldn't have even rolled down from 30 to 26. I was already comfortable at 30, right? So if I'm going to be uncomfortable, I want to get paid enough money for being uncomfortable. Anyway, hope y'all are learning something here, guys. I was trying to ramble. I actually try to teach y'all some things along the way. Anyway, back to SoFi real quick, Mark. I was on the Mids channel yesterday. I don't know if you caught that on the market close yesterday. Dude, I was just real frustrated.
Oh yeah, I loved it.
With valuations, bro. I was just real frustrated with valuations. Truth be told, the SoFi valuation doesn't make sense. But I'm talking about, like, they're undervalued in my mind now. Like, I legit think they're undervalued. I thought for a long time that Palantir is overvalued. I think Robinhood is fairly valued right now where it's at. And Tesla's overvalued right now. I mean, we want to talk about how amazing they're going to be in the future. You can say that they're undervalued, but I'm talking about for what they're delivering right now, they're extremely overvalued. And I found myself getting angry with Mr. Market, dude. I was like, dude, these valuations are whack, dude. And I was like, range game. I could play a range and make just as much money, except I'm never going to be able to completely walk away from what I'm doing because I essentially created a high-level job. But I was okay with that because I thought that it was the best thing for my mental health. Because getting angry at how a stock is performing because Mr. Market doesn't see it the way that you think that they should see it, it's no bueno, man. It's no bueno. It was no bueno for me. And I learned that I don't want to ride Palantir up to 200 and ride it back down to 100 and then try to ride it back up to 300, ride it back down to 200, ride it back up to $1 trillion valuation. You follow me? I just didn't want to do it. I was like, what if I could play this damn thing for a range and accurately be able to calculate how much money I can make off of this stock over the next 3 to 5 years, and I landed on something crazy like $10 million without having to freaking stress and having to freaking debate someone on why Palantir is valued fairly and all this. I was like, dude, bro, I ain't got time for all that shit. I just need to make money. So I found home on the range game. All right, y'all see what I did there? I found my home on the range game. And bro, I feel like I was born for this. I like for the stock market, I feel like I was born and bred and built for what I'm doing right now. Like it's all come together at this point in time for me, and I am home on the range. I am so freaking excited to not be fighting with Mr. Market anymore. Somebody wants to come over here and debate me on Palantir, cool. My puts are at 80 and the calls are at 220. What are we going to talk about? Are we not going to agree that the valuation should be somewhere in between there? Because that's what I'm playing. What are we going to talk about? Like, I don't give a shit about that stuff anymore because Mr. Market is right. Palantir is worth $150 a share because Mr. Market says that it's worth $150 a share. And man, dude, I don't know. I just feel like I'm just a lot more calm now. And then now that I found trades that I can ring the cash register on repeatedly, it also keeps me from getting angry because as I was learning like proper sizing and stuff, right? Because my mentors told me I was going to get my ass kicked, and I did. Learning sizing. Because they're like, start small, do it for like a year. And I ain't got time. I ain't going over to Tasty Trade to take a freaking pay cut. I, I ain't got time for that shit. TJ the Wheel Deal. They're like, okay. So anyway, they're like, okay, so what's going to happen? You're probably going to end up losing some money on some trades, and you're going to find a trade that you're super super confident in, and go get all your tuition money back on that, and then you'll be ready to print money. And that's exactly the way that my life has worked out, and now we're starting to print money. Every position that we're in now is just like turning green green green, because these metrics, they mean something, right? I'm learning how to fly the plane. I'm learning how to fly the plane. Anyway, Mark, what's good with you, man? So besides SoFi costing you a little consternation, what else is going on with you? You're mute.
Uh,
There you are. Go
in
ahead.
the stock market, my uranium stocks are playing out the way that my homework. Hmm?
Uh-huh.
Yeah, my uranium stocks are playing out the way I thought they would. So I'm feeling comfortable in the saddle with that. And then Venture Global, I got into that, and I got into it like October. It went down. I cashed it all in for um, uh, options, call options, and those are printing money like crazy. Um, and then just looking, 2 or 3 years out, what do I want to be in? And I'm thinking gold and uranium royalty stocks.
Nice.
So that's where I'm at now. And then personal life, it's springtime. It's a cold day, so just figuring out what I'm going to do this summer, and beginning of next year when the holidays come. So
That's awesome, my man. Grade me on
you hear me?
grade me on the show with the Mitt yesterday. What'd you like? What didn't you like? What could I learn to do better? Are you there?
Um, well, I mean, he's become a better interviewer, so it was more on him. Um, I'm sorry, what?
No, go ahead.
So he amidst the interviewer. So it was up to him to keep you rolling and deep diving and getting out of you what he wanted to. So you did what you needed to do. So
Yeah, I
if that
really
makes
enjoyed
sense.
his interview with Josh Brown. I didn't see the one with Vlad because I feel like I've already seen that one. Um, in other words, he's interviewed him several times. So I'm like, what the hell else are they going to talk about, right? So it's just like I'm good. Um, I didn't see the one with Dan Ives either. So I saw the one with Josh Brown, and I don't know. Has he only done three? I don't know how many have they done on that basis points. I think that podcast is going to be huge. By the way, I think your phone
Yeah.
your phone keeps
Well,
cutting out.
that, but he's also done his own at the various conventions. He's
Mhm.
put out his own interviews. Oh, can you hear me now?
Yes,
Hello?
yeah, I can hear you. I think there's just like a
Yeah, I mean
delay,
it's also done the one-on-one interviews at the conventions.
right, at AIP Con and stuff.
Okay,
Yeah, I try to
must be
watch.
a StreamYard thing.
Yeah, could be. But anyway, man, well, I appreciate you hopping on. I just, here like sharing the journey. There's some metrics that I've learned along the way. I had to take some losses, man. I took seven-figure losses on Google, Apple, and PayPal that I want to get back in, but I can't get back in those trades right now because I had to preserve my buying power. My old mentality is like, oh, I'm gonna go get back. I'm gonna get back. I just sell 5,000 puts on freaking PayPal at $40, and I'm good. The issue with that is that's going to take a year and a half or two. Whereas I feel like I got an Amazon trade and an MSTR trade that's ready to work now. And that's like the maturity in me as an option seller. Like that PayPal trade's always going to be there. But if I figure out how to print $1 million a quarter on MSTR, and I'm actually a lot more interested in MSTR, like who gives a shit? Because at the end of the day, my allegiance is to the portfolio, not to be like, oh, I need to prove a point. I make sure that I got to be the guy that made money on PayPal. I got to be the guy that made money on Google. I got to be the guy that made money on Apple. I'm like, no, I just got to be the guy that made money. So I want to leave y'all with that this morning, is be the person that makes money in the market. Who really cares how it happens for you? Sergio had a real good line on this channel a while back. Stocks are meant to be bought and sold, right? like zero freaking emotion. He posts his trades on his channel, and every time I look up, he's like in different shit. So there's no allegiance to anything that he does. He has an allegiance to like his concepts, but he doesn't have like any allegiance to these tickers. And right now I'm riding these horses over and over because they're working for me. Like they're working financially, but they also work psychologically. Like I like opening the portfolio. There was about a month or so when I had like 10 positions on or 10 tickers on, and I wasn't enjoying opening the portfolio because it was just like it's too busy. It was too much shit. So I was like, I'm gonna bend the rules on Tasty Trade. I know they say trade often. Some of these guys have like 200 positions, 4 or 5 sheets of positions, and I'm like, bro, like y'all got way too much fucking time on your hands. I can't do that. But if I could find some that I'm like super, super confident in, and I can ring the cash register, pun intended, I just want to play there because as soon as my hand heals, like I really like I've been putting, like I really want to like just figure out how to play in the 80s and golf. And I don't want to be glued to the TV screen because that was another thing that I was not liking about my situation was there was too much screen time. And ever since I landed on the 5 that I'm in right now, dude, I look at this shit 2 or 3 times a day and I'm just living my best life now and I feel real, real good about it. So, I call it the sweet spot. You got to find the sweet spot in the trade, but you got to find like your sweet spot, like what works for you so that you can maintain that balance in your life. Like for me, it's God, family, friends, business, right? Like that's the balance that I'm not willing to negotiate as a 51-year-old because I've already learned those lessons the hard way. I love seeing all this hustle culture on X, but these kids are 20, 30 years old, bro. Life hasn't kicked them in the teeth yet. They're going to learn. They're going to learn what's important. Like, don't be too busy. I'm going to leave you with this, Mark, and I'm going to talk with Sergio. Don't get too busy making a living that you forget to make a life. Are you there, Sergio?
I'm here. How are you?
Man, always good to see you, my man. I'm doing well. I'm in a real good spot right now, Sergio. I'm in a real good spot. My positions are printing again, but just like my mind feels very free. And then every night, 20, 30 minutes, I learn more about these metrics. Like, dude, there was a lot that I took on moving from Robinhood, where everything's cash secured, and Reg T margin, going over to portfolio margin, dude. It is like you're taking the training wheels off. You know what I'm saying? You're taking the training wheels off and you're no longer driving around your little driveway with your mom and dad supervising. They let you go run to town, and then you didn't realize you got to navigate traffic lights and one ways. And holy shit, is this a bike lane? It's serious business. Like riding a bike in your backyard or your driveway versus riding a bike downtown New York City. Good luck. You know what I'm saying?
Yeah.
So I learned some metrics along the way, and I'm like, okay, we're ready to fucking print. It's game on. You know what I mean? And I had these 2 mentors that are much higher level option sellers than I am. And dude, it's so funny because I talked to them for like an hour yesterday. And they're like, dude, this shit is playing out exactly the way that we told you. But I'm here. How's your journey coming along, my man?
Good.
I'm trying
All
to
good.
catch up. I saw your screenshots. I saw a couple of tickers that I wasn't. I don't feel like you were in, but now you're in them again. Or now you're in them. So have you made some moves?
Well, so I did listen to some of your live on replay with Amit, and that was very good. Well done. And with the disclaimer that this is not for everyone. What you're doing is not for everyone, and it will be very easy to blow the account with what you're doing, because when volatility picks up due to reasons out of our control, when the markets are swinging this wildly, what you're doing, especially if you're doing it with nearby contracts and strikes, you could get whipsawed really, really easily, especially on high beta names, right? Because to me, like, you'll sell the puts, stock will move up, and you'll roll them up, and then stock will tank. Now your puts are in trouble, and
You're
then
getting
stock
your
will,
ass kicked on both sides, man.
yeah, whipsaw is real when you're naked on both sides. But again, there's a way to treat that and handle that, and it's not for everyone, and nobody should touch it unless they fully understand everything that's going on. But
on that note, Sergio, I feel like there's still one because we're always evolving, right, as people and in our profession. So I feel like what's going to ultimately be my sweet spot strategy is I think that I'm going to sell puts and then I'm going to sell call credit spreads. I think they call that the Jade Lizard. Because with what I do, like, dude, the puts never scare me. Like, they're just so easy to navigate for me. But when something goes crazy to the upside, that creates a different level of distress, if you will.
So, very much so.
So
because the upside is unlimited.
Going to end up on short puts and call credit spreads, and whatever lady coined that as the Jade Lizard, then I'm probably going to get a bunch of fucking lizard posters here at the office because I think that I'm going to end up being the Jade Lizard freaking goat.
Well, I mean, as you said yesterday too, right? Stocks go to the from the lower left to the upper right most of the time. Although, although I'm fascinated by X and the attitudes on X, which is like fascinating to me. And
well, I think
it's
the
more like,
majority of these people have only been in the market for 2 or 3 years, Sergio. So their
they all
mentality
know
is up and to the right.
Stonks only go up, right? Stonks don't only go up. And the other thing is stonks are to be bought and sold. Okay.
Yeah.
Very few in your lifetime you will find something that you can buy and hold for a generation. And unfortunately, a lot of people create biases for themselves. And like the gentleman before, he said he was very emotionally involved in SoFi, right?
No, Mark.
And the thing is, this is not personal, man. Right? And the price in front of you is the price. Now, you may have an opinion about it being low or it being high.
Agreed.
Because when you're buying something, you have to think always there is a person selling it to you with a diametrically opposite opinion of you. Meaning, you're buying something that you're thinking it's going to go higher. They're selling it because they think it's going to go lower. And that's what the markets are so beautiful, right? And to me, once you understand that, you can calm down, you can get emotionally detached from all this. And look, we're human, we're not bots, and we deal with emotions regardless of how much experience you have. And you create biases. Humans are good to create biases for themselves. I could say, why is SoFi cheap? I can give you 10 reasons, and I can also give you 10 reasons why is SoFi expensive here, right? So my thing is, you try to stay out of all that, but it's not an easy thing to do, But then the price in front of you is the price. You cannot argue with that price. You can have an opinion about it, but you cannot argue with it. And once you argue with it, you're spending so much emotional capital on it that then that's when you really get attached. And it's like, once in a while you got to break up with a beautiful girl, and SoFi may have been a beautiful girl. And is it a beautiful girl at this level? I don't know, but the price says it's down 50% from the high. Although you have to take a look at, pull back a little bit. And that's what I think the other thing people do is they think very short term, right? Yes, SoFi is down 50% from the high. Hood is down 50% from the high,
Yeah,
but
but
Hood
it's up
is
like
up
30% in a
100% from
year.
the April low.
Yeah. Yeah.
SoFi is up 100% from the April low. So I'm like, which one is it though, right? And if you got stuck in buying SoFi at 30, okay, yeah, you're suffering. But
Yeah.
if you bought it at 8 and you want to ride the roller coaster up and down, and that's one stock you found that's your life's calling, and you're going to hold on for the next 15 years, it may work out for you. But
Yeah.
I'm not of the opinion that you should ride that roller coaster, because that's very painful, every which way. And but no, I mean, look, man, what you're doing is fine. You just got to manage it. You're learning, right? And it's constant learning. And I'm glad that you are. You have to experience,
Yeah, sizing, Sergio, is serious, bro. What is it? Like, once I really got it down, I'll have you on. I'm gonna reach out to Dr. Jim Schultz and some of the Tasty Trade crew, and I want to do a Wheelers podcast, and I wanted to call it Size Matters.
Oh,
because,
100%.
my goodness, dude, sizing is serious, because I wouldn't have some of the L's if I would have just been trading smaller. But
Yeah.
I was so sure that some of these were no-brainer stuff. But the one thing that I underestimated was, or I guess I just wasn't familiar enough with it, was the power of Vega. Because when
Yeah.
you're in shorter dated strikes, your Vega doesn't have as much of an impact on you. But whenever shit is a year and a half later, they're like, it's like the wind. Like, to me, Vega's the wind, and the wind's blowing, and you're kicking that football, or you're hitting that golf shot 300 yards. That wind is going to affect a 300-yard shot a lot more than a 40-yard shot. You know what I mean? So to me, Vega's like the wind. So they're like, if you're going to be selling your leaps puts because you like them and they're easy, well, we're just going to let you know that this Vega's going to whipsaw the shit out of you. So be mindful.
Well, that's because
matters.
when Vega is like that, your Theta, I mean, the game you're playing is Theta, right? Decay.
Yeah.
And when you sell a leap put, decay is minimal or none, actually, for a long time,
for
right?
the first 6 months,
Right, at least. So the thing, again and again, look, markets, what I did, personally speaking, started the year, my thing was, I think indexes are going to be flat for the next couple of years. I think it's going to be a really stock pickers market. And as soon as the Middle East tension crisis started, I sized everything down, right? It's just sized down. And it doesn't mean you don't trade. You still trade, but trade a fifth of the size that you're trading until things settle down. The other thing is, that's the other thing that I tell people who listen is, markets are open every day. Why are you so,
why does it have to be today? Why does it have to be today?
Why? Like, why do you have to do something every day?
Yeah.
I mean, Schwab is rich enough, Tasty is rich enough. They don't need your commission. Why do you need to? Why do you feel obligated almost to do something every day? Because people like the adrenaline, people like being involved. I'm like, no, sometimes the best trades you do is the no trade at all. That's the thing that newbies don't understand. Sitting on your hand is an art. You need to exercise that, because I have no control over what's going on anyway. Now you add the added stress of the Middle East tensions. One tweet can blow you. One tweet can crack you. And I'm like, no, it's not worth the risk for me to size. So once you don't size, cool, it's all good. Because sizing will blow your account. Incorrect sizing, hey, shout out. But no, I mean, look, what you're doing is fine. Just understand. The other thing is on X that I kind of find fascinating is people don't talk about risk at all, right? Because they make it sound like it's risk-free. And I'm like, nothing is risk-free. In this type of market, with the volatility picking up, instead of selling naked puts, maybe you should look to sell put credit spreads.
Yeah.
Or sell some iron condors. Or if you're bearish, just sell call credit spreads, because stocks are going down. There is no ifs and buts about it.
Yeah.
as opposed to being naked on both sides, having all that exposure. So try to figure out what's defined risk. And even if it goes against you, it's not going to kill you, because from the entry, you exactly know if you put a 5 wide or a 10 wide, put credit spread or a call credit spread, and you take in rule of thumb being 50%, you took in 50%. If you sold a 5 wide, put credit spread, okay, you took in 2.5. Max you can lose is 5. Well, you took in 2.5, so that's all you can lose is 2.5. And play the game that way. Slow the roll down a little bit. And there will be a time. This is the thing that I don't see. I don't see people adjusting with what they have in front of them.
Yeah.
There's many ways to do the same thing. Instead of being naked puts and naked calls, maybe you can sell iron condors. And when things calm down, when things are clear, then you can go back to your naked puts, naked calls, and strangles again. So that's the thing that I don't see. That it's like you have to move with where the wind is taking you, because you cannot control the wind. That's it. You just can't control the wind, man.
It's serious. Yeah, my mentor looked at the portfolio. This was like 2.5 months ago. And he said you need to have your cornerstone position that you're running your vanilla covered strangle on, so that all else fails, you're printing money over here. And that's why I'm running the version of the covered strangle on Amazon. And he's like, people that don't understand metrics are going to be like, oh my God, you're like so risky to the upside. And they're like, no, you're not, because they're not going to see the 25,000 shares that are going to make you $25,000 for every dollar that goes up, because you own 25,000 shares of Amazon now. So now you have a license to go sell all those naked calls, because it's not as naked to experience wheelers as it is to somebody that just sees that amount of contracts. And he goes, and just go print money over there and start manufacturing the win over there. And you're going to feel real good about it. And dude, all the stress went away when Amazon became the cornerstone for me. Cause he's like, what's the floor? 150? You're in it for 210, because it was 210 at the time, but I bought the 5,000 more shares. He's like, you're not going to, it's Amazon. Is it going to go out of business in your mind? Like, it might take a year or 2 or 3 for it to come back up, but it's going to come back. It's going to come back. Like, this is something that will happen. Some of these other higher beta stocks that don't have billions and billions and billions of dollars, maybe they don't come back. Maybe there's mergers, maybe there's acquisitions, but Amazon is going to be Amazon. So you need to have that linchpin in your portfolio.
Yeah, I mean, I fully agree with that. First of all, a hood, right, being down 50% may or may not be a good deal, because if the indexes sell off another 10% here, I'm very much doubtful that hood is going to go counter trend back to 100. I think it's going to get cut in half again, right? But that's the other thing that I want people to understand here is there are 10,000 tickers, folks. There is more than 10 names on this planet. But all I see is SoFi, Hood, Palantir. Bro, again, at the start of the year, I said to myself, okay, if it's going to be a stock picker's year, what can I do to find me some gems? Because one thing I agree with Jim Cramer, although he has blocked me on Twitter, is this. There's a bull market somewhere, always. And he said that, right? Yeah. So what do? I go create a couple of scanners, very easy to do. I said, okay, I'm a put seller, put credit seller. Okay, I'm going to go find me stocks that are making 52-week highs. Okay, so you create the scanner. There is literally on my watch list 190 stocks. And they're not small companies. They're not meme stocks, none of that stuff. Big companies, right? So I'm like, okay, I'd rather sell boring put credit spreads on Walmart than, because it's making 52-week highs. I mean, there's no ifs and buts about it. Then guess what Hood is going to do? Guess what SoFi is going to do? I don't want to deal with that additional stress.
Right.
So when you're selling puts or selling put credit spreads, you're bullish on the underlying. Okay, you're bullish. I mean, or at best sideways. Well, if you're selling put credit spreads on a naked puts on a stock that's making 52-week lows, you're in trouble from the get-go. Your starting point is bad.
Yeah.
So my thing was, okay, I'll find these stocks. It was easy. Found the stocks, sell the puts, or take some directional bets. I just texted my group I said, I gave him 3 tickers, right? So nobody, I don't think anybody has heard these names, but these stocks, if you look at these stocks, they don't look anything like the market. They don't look anything like the Mag 7, and all they're doing is just going up. Okay,
Yeah.
so put credit spreads on this, on stuff that's going up. Relieve some stress out of your life, as opposed to Hood. Okay, under 70 now. Is it a good deal? No, I don't know, and I don't want to guess.
Yeah.
I don't want to guess.
I
All
think
I
I
want to
think
do,
Hood, whether it's fair or not, Sergio, they're tied to how crypto does.
unfortunately, so
And
you
and
know,
and they have, I mean, this is talk fundamentally real quickly. Hood has 10 or 11, maybe even 12 lines of business that produces $100 million in
yep,
revenue per year.
yep,
It
yep.
is a very well diversified business for people that actually take time and look at the numbers, watch the interviews. Vlad says it all the time. Y'all go watch him, mate. He's done a handful of interviews with Mitt over there. And they still don't get credit for it because it's still looked at as the degen person that's buying short dated options, the
Yep.
whole GameStop fiasco. Like they still have a stigma, whether fair or not, they still have a bit of a stigma attached to them. And it's essentially how Bitcoin and crypto goes. If it
Yep.
goes on a tear, Robinhood seems to go on a tear. There hasn't been a decoupling there yet. And
That's
I
for
don't know
sure.
when that decoupling is going to happen.
I don't think it's justified that 20% of their
Me neither.
revenue comes from crypto trading and the rest is a growing business. But then if you look at fundamentals on Hood, okay, Hood's going to earn $2 this year if everything goes well.
Yes.
At
Amazing.
155, 75 PE, by the way, everything at some point will be treated on its fundamentals, folks. You can draw all the chopsticks on the charts and do angles and trend lines and whatever not. It works maybe,
But the
but
Fibonacci, Sergio.
yeah, but the 31.8%. I'm like, bro, what is happening here? So fundamentals rule, right? So Hood earning $2 this year with about 15% growth at 60. Okay, 30 PE, double its growth. It's about fair. I still say it's a little bit more expensive, but
Yeah.
my thing was like fundamentals. Pay attention to fundamentals, understand the fundamentals, and then maybe you'll just can put on a position. But my goal is like, why do I need the additional stress on guessing where Hood may stop going down? I don't
Yeah.
know. I'm not good enough to know that.
Right.
And if I'm saying that, I think 99% of the crowd doesn't know either. So I go like, Hood, maybe we'll put it on the side, on the shelf. Maybe at some point, it's good. But then now I deal with the other ones that are making 52-week highs. Seriously, TJ, there are so many names in there that you wouldn't even think they would be there. For example, Ross Stores, TJ Maxx, all these big companies,
Yes.
if you look at their charts, they
Huge.
don't look anything like the market is looking. They don't look anything like Hood or SoFi or this or that. Well, I'd rather deal with those. And when time comes to deal with Hood, basically expand your horizon a little bit. Just open your eyes, be open-minded, because there is 10,000 stocks out there. And there are gems always. There are always gems in there. And once you find your gem, stick to it. I'm a trend trader, down or up. I know how to read a trend, but I don't want to catch a falling knife constantly. That's very, very upsetting. Then you get emotionally involved. Then you get angry. Then you get this. Then you get that. I'm like, no, man, it's too short. Life is too short to deal with all that stuff. But hopefully this thing will be over in the Middle East. I'm not started thinking if it goes on for a couple more months, what's the macro effect going to be on the general economy? Because our economy is 75% consumer spending, GDP is, right? And if gas, I mean, I just pay $6 a gallon in California for gas. So I'm like, okay, how long can the consumer handle that? Well, you have to drive to work. I mean, you need to drive, for God's sakes, right?
Yeah.
So people don't think it's a lot, but if you're getting 4 tanks of gas a month, 5 tanks of gas, that's $100 a month extra you're putting out, which you're not getting productivity out of. That's $1,200 a year. And now what are you going to cut back on? Because your paycheck is not going up, right? So I'm like, okay, how much longer can this go on without the macro picture changing? And what will happen is the markets will adjust for that. As soon as the market, because at the moment, I'm actually fascinated how resilient the indexes are at the moment, right?
Yeah.
If you had asked me 3 weeks ago, Sergio, we're going to be in here, throwing, bombs are going to be all over the place. Middle East is a mess. Oil is 110.
And we're going to be down 5%.
Yeah, and where's the market going to be? I go like 20% lower. And so wrong. That'd be so wrong. Well, the market's only down 6% from its all-time high. And
yeah,
it seems like
but the Russell did go into a bear market a week ago or so. So there are some, like, from peak to trough, right? Like,
yeah. But again, if you look at the underlying stuff,
yeah,
there has been bloodbath in the underlying going on for a while.
yes.
Because like if you're involved in Hood, SoFi, all these names, they're already down 50% from their highs.
Yeah.
So market being down 5% really doesn't mean anything to you, because my mentors used to say it's not a stock market, Serge, it's a market of stocks.
Yeah.
And that makes a lot of sense to me. It's a market of stocks. Find your stocks, bro. Find your stocks, find the trend. If you like shorting things, find the downtrend. There are plenty. You can run the same scanner on stocks that are making 52-week lows, run the same scanner on stocks that are making 52-week highs. And believe me, folks, you will find at least a couple hundred names of mid to mega cap stocks, 20, $30 billion market cap stocks. I'm not talking for you guys to go trade some micro cap at like 80 million value market cap. So, but look, this will pass. How it will end, who knows? We don't know. But markets open every day. Don't feel in a rush.
Let me share something that does concern me a lot, 'cause you alluded to the macros a little bit.
Yeah.
Does that show up there where it says credit card debt in America?
Absolutely, yeah. Well, that's been going up for the last 6 months already.
This guys is one of the most, like, sounding the alarm. This is something that has really been sounding the alarm for me. U.S. credit card debt hit a record high of approximately 1.28 trillion, with over 4 in 5 U.S. adults, about 227 million people, holding a balance of 5.5% in the fourth quarter of 2025 alone. So, guys, credit card debt on average is between 20 and 29% APR.
Yep.
So this is not good debt. This is not like, oh, and you can argue whether or not like your little 3% mortgage is good debt or not. I'm going to argue that depending on where you live, if you're in a state where the prices are going up like crazy and you're blessed with a 3% mortgage, I think long term you're probably going to do very well. But this here is just scaring me, because I think that we are living on credit cards.
Absolutely.
That's a house. It literally is a house of cards. It literally is a house of cards.
The consumer is just like the federal government, right? Our national debt just hit 39 trillion. It's going to be 40 trillion in exactly 100 days, folks.
Yeah.
We are, like, as a consumer, I'm not, but most people are just like the federal government. They live on borrowed money. And I'm like, there is a cost to borrowed money. I mean, if you're buying your food on BNPL, right, buy now, pay later, because you're in huge trouble. Huge. It's like you don't even understand what's going on there. And unfortunately, government gaslights you, says, oh, inflation is only 2.5%, everything is fine. I'm like, no, those are all bullshit. Don't listen to any of this thing government says, regardless of who's in the White House. That has nothing to do with politics. But so for me, where I go, TJ, for my macro picture, to put my macro picture together, I go to Fred. Fred is Federal Reserve Economic Data. It's a free website, folks. It's by the Federal Reserve. The statistics that TJ just showed, there is much deeper stats on that. Yeah. The breakdown of credit card debt, subprime versus prime. Now, the problem I'm seeing is prime credit card holders are getting into trouble.
Yeah.
That debt is going up. Subprime car loans and regular car loans are delinquencies.
Yeah, that was another one I wanted to show y'all. Does that show up right there?
No.
Doesn't show up? Okay, let me go this way.
No, if you can, go to Fred. FRED.
Yeah, real quick. This is another one that rang the alarm. Auto loan delinquencies in 2025 have hit a 15-year high, with serious delinquency, 60 plus days, hovering around 1.45 to 1.56 for most of the year, driven by high vehicle prices and inflationary pressures. 90-day delinquencies reach 5%. I mean, guys, a car for the most part is not it's a luxury item if you're buying a car that you can't afford per se, but like a car for the most part, I would consider it a necessity.
Yep.
And when people are falling behind on a necessity, we're not talking about buying a Rolex watch or a motorcycle per se, because I have a motorcycle, but that is not a necessity. That is a luxury item for me.
Yeah.
People are falling behind on necessities, and then I haven't pulled up again, like Fred, like what the delinquency rates are on mortgages, because that's a telltale sign.
It's also trending the wrong direction. And all I'm saying is, look, macro is important. You can't trade, 40-day options on macro, but it's something to pay attention to, because look.
Well, you got to look at how is it going to affect the companies and your underlines potentially. Like, again, let's talk about my horse.
Yeah,
Amazon.
SoFi. Okay, for example,
I would say that Amazon is very reliant on the consumer on a big sector of their business, right?
Yeah. Well, Amazon also has AWS. They got AI going. That's different.
That's why I like Amazon, because they can withstand.
I mean, let's look at SoFi, right?
Oh, Lord.
The short report that came out. Not that I read too much into it. I did read the PDF. There are valid points in that short report as far as what the consumer can go through, but they made it sound more like they're doing fraud. They're dumping all the non-performing loans into some bucket and this and that. That I don't know. What I'm saying is that, though, again, people treat SoFi not as a bank. SoFi is a bank,
right?
Period. Now they have online banking and they have other things and this and that.
Yeah, they have a technological component, but I mean, it's like
Tesla. Yeah, it's a bank.
So 90% of your revenue comes from selling cars. You're still a car company that's got some sweet shit going on the side, but at the end of the day, you're a car company that has really cool
that's what people say about Tesla, right? They go apeshit, the Tesla crowd, when it says Tesla is a car company, until robots are accretive to revenue and earnings. Optimus is, RoboCab is, all that. At the moment, Tesla is a car company for me. And it's like SoFi is a
car company that is rapidly evolving, but when that becomes accretive and we actually see it on the bottom line, I don't know, a year, 2, 5, I don't know. Elon's timeline, it changes, right? I don't know.
That's a different story. But on SoFi, going back to SoFi for a second, SoFi is a bank. It's going to be affected what happens with macro. If delinquencies are going up, and SoFi, by the way banks work, okay? Yeah, but that's all noise. Forget all that noise, folks. Don't even read that shit. Here's the thing. If you understand how a bank works, Bank of America, Wells Fargo, banks are not worth a dime. If you took them upside down and shook them, 2 pennies will not fall out of their pocket. They don't have the money. Yeah. They take your money. They take 90% of your deposit and put loans out.
Yeah.
Banks are as good as their loan portfolios are. If the consumer is going to slow down, if the consumer is going to get delayed, what do you mean that SoFi consumer that took a loan out from SoFi is not going to be delayed or not going to be delinquent? Of course they are. Look at the bigger picture. Forget the noise. Noise is somebody puts out a short report to cover their short, blah, blah, whatever happens. That's technical stuff. But look at it in a way that kind of makes sense to you, and common sense stuff. If TJ showed delinquencies are up on credit cards, delinquencies are up on car loans, delinquencies are up on mortgages. Well, SoFi deals with all these three.
Yes.
Does that mean what percentage of them are they all prime? Are they, you need to go a little deeper into their books and look at it. And then unfortunately, we don't have that. But there are 5 people at SoFi that know exactly what the risk metrics are at SoFi. And none of us who have opinion on SoFi are privy to on any of that information. Only 5 people know that. That includes the CEO, CFO, CTO, probably. We just kind of guessing. Yeah, SoFi is okay here because it's down 50% from the high. I'm like, no, I don't know. Again, I think macro is going to be affected. If oil prices stay here at 110 for another couple of months and gas prices keep going higher,
Yeah.
we need to watch macro. I mean, seriously,
I think what gives people and myself, I feel like I do speak for the crowd as one of the largest retail investors in SoFi on YouTube and X, is we've always heard how high the FICO scores are for SoFi customers, and I'm personally a customer. They gave me a freaking $4,000 credit card, so SoFi doesn't like screw around. They gave me like a $10,000 personal loan, and I asked for more, and they're like, "No, let's build a relationship, and we'll give you 10." And I was like, "Well, can I pay it off tomorrow so you can give me 20? Because this is ridiculous." But they're like, "No, like let's build a relationship." And I'm like, "Well, I thought y'all had a bunch of artificial intelligence. You should know that I'm pretty legit." And they won't do it. Like they don't start you off with like crazy.
Well,
Whereas with Robinhood, they gave me like a $30,000 credit card immediately because they obviously see your trading account, right? It's a little bit different.
But if you look at the general trend in the XLF, which is the financial index or the ETF.
XLF.
If you look at Bank of America, if you look at Wells Fargo, if you look at JP Morgan, if you look at all these big banks, if you look at Visa, if you look at MasterCard, if you look at all these companies, their stocks are in their own bear markets already. They've been there for about 2 months now.
Yeah.
So same thing is happening with SoFi. So SoFi is being treated like a bank now. And something very strange, not strange, but it happened. You were talking about valuations are driving me crazy, right?
They were, man. They really were.
What did Wall Street do? What did Wall Street decide? Out of the blue. Like there was no sign of it. But then one day it started. They said everything overvalued. We're going to trim the the PEs on these things by 50%. And when that happens, your stock is going to go down 50%.
Yeah.
Period. They decided Hood should not be selling at 75 PE. Should be selling at 35 PE. And sure enough, Hood has gotten cut in half. SoFi, 60-cent earnings this year. Okay?
Yeah.
35. It should not be selling 60, 70 PE. It should be selling at, whatever it is now, 30 PE. At 30 PE, at 60-cent earnings for 2026,
it's reasonable.
Is it expensive compared to another bank? Because JP Morgan is selling at 15 PE. So ultimately, these things
but they are getting credit for their growth. That's why they do have a higher PE. Because
absolutely. But should the growth be
SoFi?
should the growth be though twice its growth rate, right? So should the PE be twice its growth rate? So all I'm saying is understand all these mechanics. Again, you could be emotionally attached to stocks. Don't do that. Listen to TJ. TJ said there's only one wife.
Yeah.
You can always dump a girlfriend. Okay. So
stocks or girlfriends.
Divorce is expensive. So think of twice before you do that. But then with a girlfriend, hey man, there's 10,000 fish in the ocean. You know what I'm saying? So, but I mean, I'll just finish with this. Pay attention to macro. It makes a difference because rising tide lifts all boats or lowers all boats. The general market conditions are going to affect your portfolio, period. And general market conditions at the moment are sketchy. Again, only 5% from the high. And I see all these people on X, my portfolio's down 50%. I'm like, that says either you're way oversized or you're in these crazy high beta names that can move 30 points a week. So that's a different story.
I wanted to, before you cut out, Serge, I know you're doing your deal today, right?
No, not well. That's at 3:00. But I
wanted to ask you because I know that you had issues with some of these companies that were like pre-revenue, getting like crazy valuations.
Mm-hmm.
I don't follow a lot of these companies. Has that scaled back yet, or is the market?
Some, for sure, yeah, absolutely. But there are still crazy ones in there that are getting valued at levels that. So it happened with quantum computing stocks, okay? Mm-hmm. And I shorted some of them. It happened with a lot of mainstream names that valuations got ridiculously out of control, but it still happens. And it's a fun ride as long as they last. But then at some point, they're all going to come to earth and they're going to come to, you're going to have a mean reversion trade at some point in all of them. But again, momentum is a very powerful thing, TJ. You cannot fight momentum on the way up and on the way down, both ways. It cuts both ways.
Right.
Just because something is down 50% from its high does not make it a good deal. Just be careful on that.
Yeah.
And just expand your horizons. There have been wonderful trades. I mean, the trade is in front of us when precious metals, right, were ripping, right?
Yeah.
My 52-week high list, out of 300 names, 200 were precious metal stocks, Freeport-McMoRans, or base metal stocks, aluminum, Alcoas. These are huge companies. Look at these charts versus look at, you're dealing with Hood. I'm like, why am I supposed to deal with Hood? Look at all these precious metal miners. They were ripping. Now they all disappeared. Another good thing, TJ, to create that 52-week high list for you is you can clearly see the rotation, because stocks will fall off and new stocks will come on. And for the past month and a half, even before the Iranian crisis, oil stocks were already ripping, all of them. Phillips 66, Valero Energy, ExxonMobil, British Petroleum. So why don't you guys trade those stocks? If you're a trader, I'm not talking investing. Investing is a completely different story altogether. So you'll see the rotation live really happening, because all the base metal stocks, all the precious metal stocks, all the financials fell off. And now it's full of oil stocks, the 52-week high list. Okay, trade those for now until that game ends. And then you'll see maybe healthcare stocks will start appearing in your 52-week high list, and then start trading healthcare stocks. But there's so many different groups that don't be just tied to 5 names that you've heard on X or YouTube or whatever for the last 5 years. Expand your horizons a little bit. Just open your eyes. There is a market. There is a bull market somewhere all the time. And most people, they trade on the upside. I mean, they're long, right? They're long investors. Not too many people like shorting things, and not too many people even understand how to do that stuff. If you're not in that camp, if you're 100% long investor, pay attention to rotation. Rotation works, because all the money that went out of the Mag 7, where did the money go? It's constantly rotating. It's going into oil now. Okay, it will come out of oil, and maybe it'll go back into precious metals again. Find a trade for yourself. Do a little bit of a work, as opposed to just listen to some fool on X. I'm like, what is wrong with this picture?
I agree. Do you got 2 more minutes? I wanted to bend your ear on something real quick.
Yes, sir.
We have a couple of contacts at JP Morgan, and they brought us an offering to invest in OpenAI. So my brother-in-law got real excited about it, and he's like, "Hey, cuñado is like brother-in-law in Spanish.
Yeah.
Like, what do you think about OpenAI?" And I was like, "Do you want like the truth, or what do you like where are we at?" He's like, "No, it's because our contact at Chase is like, hey, we can get in this round." No, the round is closed. I used to work for a venture capital firm in Culver City, California, called Can-Am Capital. They moved to Studio City. I don't think they're around anymore.
Okay.
We're taking companies public on the Toronto Venture Exchange at the time. So I'm like pretty familiar with venture capital. Like, I was there for like a year and a half, and I went down that rabbit hole. There's a movie called startup.com that's all about VCs and stuff. It was a really cool movie back in the day. So I was like, are they getting us into the round? And he didn't have that answer. And I was like, go tell the guy to call me. The guy never called me, right? So that was like a red flag. And I go, so I just want you to ask him this. I go, ask him if they're trying to use us as exit liquidity for the people that are already in, and what kind of premium are we having to pay? And if we get a hold of these shares, potentially OpenAI is going to go public at the end of this year or first part of next. How long are those shares tied up?
Yeah.
Because historically, IPOs tend to crash a little bit and find their footing if they go public at nosebleed valuations.
Like so Facebook did.
I don't want to be the exit liquidity for another company of theirs or another customer of theirs, and then they're treating us like they're doing us a solid because we're getting into OpenAI. It's like, we can go invest in Microsoft. They own a big portion of OpenAI. Like,
I rather do that. I don't trust Sam Altman as far as I can throw him. I think he's a snake oil salesman, and it's my opinion, right? And Hood is doing the same thing. They have the venture capital mutual fund now. They brought it out a month ago. Is that exit liquidity? Are they using retail for exit liquidity on that as well?
Yeah.
But I don't know. I have mixed feelings about AI. I don't know where it's going to end up. Again, I'm not ashamed to say I don't know. I don't think anybody knows, and I think it's going to be a change coming in this country. And I'm not the doom and gloom group either, saying a massive unemployment and everybody's going to be laid off and this and that. But the picture is pretty clear. I mean, it's already happening. Like Block laying off 50% of its workforce. That's massive. Those are not dig ditching jobs, by the way. I mean, they're not digging ditches over.
Like to me, that's the biggest thing that scares me with the SoFi investment is, they have these Henrys, right? The high earners, not rich yet, and that's all fine and dandy, but most people are good people, Sergio, and they're going to pay their bills when they're gainfully employed and they have plenty of money to do so. I think people don't pay their bills because there's a lack of money, not a lack of intention. You know what I mean?
Absolutely.
Like a lack of integrity. So if the unemployment rate keeps rising, that's going to be no bueno for SoFi or any of these financial companies or retail companies. There's a lot of companies that get affected because money stops circulating in the economy because people are going to tighten. They're going to tighten back. They're not going to be eating out as much. They're going to strip down to the bare essentials because there's no longer disposable income.
But that may be like way down the future, but you're already seeing what AI is going to be capable of doing.
You're seeing things break. You're seeing things break. And then I think that the Fed has been short to act and react and pivot. And it all started a few years ago when he said that inflation was transitory. Like he might have been able to been a lot more aggressive back then, and there wouldn't be as much uncertainty right now. But he was afraid to. That's the thing I don't understand about it. It's like they're always looking at lagging indicators. It's a lot like the chartists. It's a lot like the chart squigglers, the chopstick people. Like most of the shit they use is a lagging indicator. So I'm like, okay, well, this is exactly what it looked like the last time it rained 2 inches. So that's what we're gonna go on when the weather changes on a regular, every second the weather is changing across the board. And that is not indicative of what might happen this time. They're just using it as a reference point.
Yeah, I think AI is bigger than horse and buggy to steam engine. I think it's bigger than the internet all put together. I think this is going to be either revolutionize the way we live or we're going to be miserable people with no jobs. Because if Elon keeps saying, hey, he was on Joe Rogan. I watched it and I was like, Joe Rogan is a meathead. He doesn't understand finance and he didn't ask the right things. And Elon in like a 5-minute span said, universal high income. I'm like, what does that mean, Elon? How am I going to get there? Like, how am I going to pay my bills? Like, what does that mean for me? Like, as a person, as a human, like on this planet, universal high income. Okay, what does that mean? Like, how am I achieving that? How am I getting there? You have the bloodline of this country is logistics and trucking, long haul truckers, right? There's millions of all these people who have been truckers for generations. If autonomous trucks are coming, which they are, I know I'm in the business. I'm trying to put my own autonomous fleet together. And I'm going like, if Waymos are coming, if all these jobs are going to be eliminated, what are these people going to do? Because don't come to me as Sam Altman saying, oh, we retrain. I'm like, bro, we can't train a trucker that's been driving a truck for 30 years, 20 years to go become a coder or whatever. I don't know how this is all going to end up. It's a fascinating time to live in. And I don't know how this is all going to end up. But again, that has nothing to do with our trading. That's something completely different. When it comes to trading, folks, I'm telling you, sit on your hands. If you're not sure, sit on your hands.
Yeah, I think the best trades that I've made lately are the ones where
not a huge fan of UBI either.
I did the trade in my head, but then I didn't actually execute it.
Yeah, I'm not. I mean, look, the things I feel. You have kids. I have kids. My daughter is graduating from college. I think about them. Like, what are these people? What are these kids going to do? I'm fine. I'm okay.
Yeah. Nah, I feel like my son is so screwed, bro. Like, I think that my son's 25, going to be 26 in April.
Yeah.
And I'm just like, Jeremiah, like, for me to like do what I do for a living.
Yeah.
I could have done it, and I did it with 250,000. Like, I created what we have with 250 grand. That was my seed capital. I feel like with the way that everything's a cost of living and everything's growing up for you, like you need $500,000 to $1 million if you really wanted to like this is what I want to do, because life's gotten so damn expensive. The wages haven't kept up with inflation, not even close. You know,
Nope.
it's we have housing prices across the country, dude. Like just in San Antonio, which is the city I'm most familiar with, do apartments that I was paying, you know, $1,000 for, they're now going for like 2,400, but the
Yeah.
average income hasn't gone up that much. So I'm like, how the hell are these people? What, do they got 3 roommates? Like, how are
Yeah.
you? And then there's people that are like, I don't know if you've heard of this thing where they buy a house, these investment groups buy homes, and they turn these homes into like 14, 16, 8 real small bedrooms. And they're like miniature hotels in these
Yeah.
homes to
Yeah.
combat the housing crisis across the country. It's a freaking
No,
shit.
it's going to be fascinating times. I'm glad I'm living through it. I'm glad I have maybe $3 worth of brains, hopefully, to try to figure out and take advantage of it. Yeah, absolutely. So I'm in a house that I bought in 2003, the year I got married, right? I'm still in the same house. House is almost paid off. It was an $825,000 purchase for me at that time. And then the financial crisis hit. A financial crisis hit. It went down to 650,000, right?
Wow.
Now it's up to probably close to 2 mil. Now you have to think of this. You're going to go 825 to 2 mil is 1.2. It's gone up 110%. Well, I've been in this house for 23 years. 110% divided by 23 is like 4%, 4.5%. Yeah. Maybe it's not that great of an investment, right? But I agree with that comment. All the printing that we have done brought us here. And to answer finally the question is, in May, as you know, Powell is gone. I think White House and the Fed are going to be one, honestly, because he's appointing all his people, right? Yeah. And I think White House is going to dictate fiscal policy, and they're going to lower the rates because, look, man, midterms are coming. At the moment, if the elections were today, I'm not sure if Trump is going to, or the Trump administration or the Republicans are going to win the midterms. And that's the other thing, like that's the other tail risk, right? What happens if these fucking Democrats win again? I'm like, we're toast. We're dead people. So I'm just going, okay, let's just sit down. Let's digest. Once in a while, turn the computer off. Walk the F away. Walk away. Just walk away. It's okay. It's okay. Just walk away. Don't be addicted.
I agree, man. Well, I got to run, man. I appreciate each and every one of you guys. I got to go grab a snack, and I got a couple of FaceTimes, and I got to grab a workout. I'm on the road to 200, Sergio. Weighed in this morning at 214. So 14 pounds from now, Captain Crunch will have to do a face reveal. He's the biggest troll on X.
No, you're looking. I can tell you're looking thinner. I've done your live 6-8 months ago. You look like a completely different person. So keep it up.
I feel good, man. My wife's been really instrumental. She'll like cook zucchini, squash, and just like, hey, just like eat these vegetables. Like, sit here with me. Let's bullshit over the kitchen counter and let's get some good nutrition. Because I would go for the bag of chips. I'd go for the soda. I'd go for just whatever's quick because I'm on the run because I got to go make 10 trades today. And now I'm trading less and making more. You know what I'm saying?
That's the way to go.
And dude,
that's the way to go.
It's not about how many trades you make. It's about making the trades that you make count, right?
100%. 100%.
And it's not about pushing a bunch of buttons. It's about pushing the right buttons, guys. I got to run. I appreciate you, Sergio. Y'all could follow Sergio on YouTube. He's Sergio Avadian. Let me see if I can find you real quick on here, Sergio. Give me a second.
So folks, be careful. Don't trade every day. You don't need to. When are you coming out to West Coast anytime soon?
We were going to go to Pebble Beach, and then my wife changed it to we're going to the Cayman Islands. So that's okay.
Let me know when you're coming out here.
Yeah, for sure. This is Sergio's page right here. If y'all could give him a follow, Sergio Avadian. I don't know if I click on that, it maybe shows you how to. Y'all should be able to find it right there. There we go.
You'll find me on the internet. If you don't find me through the financing, you'll find me for the other thing. But yeah, just.
So the one thing I will interject is the one thing that I like about Sergio is that he shows his plays. because I'm open to criticism from anyone if they're transparent. But if you're not transparent and you're just telling me how I should be running my life and my portfolio, but I have no idea whether or not you know what the hell you're talking about because you're not willing to show your plays and you want to hide under this guise of anonymity,
or
I'm like,
post all
dude,
your
show me your
winners.
position and I'll know how you feel. But we can bullshit about stocks all day long, but show me your position and I'm going to know how you feel about it.
I mean, I post them every Monday, Wednesday, Friday on the community page of the YouTube channel. You like it, you like it. You don't like it, tough shit. You know, as I say, this is not financial trading or investment advice. What I do is very risky. Go do your own due diligence. Don't fucking bother me if you fucking take a trade and follow me and then shit turns into shit. It happens. I lose. Okay. So there you go.
Facts. TJ the Wheel Deal signing off with Sergio. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.
Take care, guys.
Take care, man.